All right, so much to unpack there in that report. And join us now to help us break it down. We have Nnamdi Nwizu, co-managing partner at Commercial Partners, joining us via Zoom. Great to have you on the program, and happy independence.
Same to you. Great to be here. Thank you.
So, looking at the report, not much to rejoice, over in the last 7 years, looking at that report. But I want to get your perspective. Nigeria at 62. How would you describe the economy so far?
Well, I would say it's not been a great story for us so far. If you look at Nigeria as a country, or let's assume Nigeria was a professional or a footballer or something that held so much promise. And all you needed was to have the right people run it and manage it to get it on track. But for some reason, you get the wrong mentors, and then everything gets totally derailed. So not in a pretty picture. Looking at all the various indices and metrics that you want to discuss when you're looking at a growing or a developing economy or an emerging market or frontier market, whatever you want to look at, or however I want to categorize it, it's not been. I mean, even listening to the videos and listening to the various people talk before I came on and basically tell you the story, it's been a sad one and a disappointing one so far.
Yeah, quite interesting. And from a 1960 perspective, our GDP has jumped about 100-fold, from about $4.1 billion then to about $440 billion in 2021. And obviously, we're quite declining, at this point. But how do we get 100-fold again from here?
I mean, first of all, looking at the GDP numbers, if you were to compare with other countries, say countries like maybe Ghana, Egypt, Togo, the growth from 1960 to date looks good. But if you are, first of all, to look at things like the GDP per capita, you would see that we're not doing too well. If you were to look at, say, poverty rates in the 60s, I think it was about 40%. About 15% in the 60s, and now we're well above 40%, which even says to you that despite the over 100-fold growth in GDP, it hasn't translated to the pockets of the common man. If you look at the US, for instance, the US has gone from roughly about 22% poverty rate to say 1% or less than 2% right now. For us to move forward, how do we get a big jump? I think we have to look at certain things. One would be, first of all, how do we get security right? Because you know that security is impacting, the growth of the economy tremendously. You've seen Nigeria trying to grow the world agriculture, but when you think of the herdsman crisis between, the herdsmen and the farmers, and realize how difficult it is for them to even farm, or you look at power, which is another sector, and look at what the power output has been and keeps dwindling. Some days you have national total blackouts. Look at all those things and you're saying to yourself, okay, how can we get this thing right? I would say pick whoever comes in, for instance, next year, pick 1 or 2 or 3 sectors and decide that these are the sectors that I want to focus on. If you can get power right, get security right over the next 4 to 8 years, then definitely you're on our way to a 100-fold jump again.
And looking at the report there, we saw our import bill sky high there, and Nigeria is quite, an import-dependent nation. Talking about we import almost everything, mostly everything. And how do you think we can actually, make this import substitution a reality? Looking at where we are now, even from what I'm wearing, right now, imported, fabrics imported. How do we make this, I know it's going to be painful, but how do we start this change, really?
Well, I think it's first of all trying to move from a consumption-based economy to more of a production-based economy. So if you want us to start, first of all, no country is an island on its own. No matter what you do, you definitely get to import goods and even services also. But like I mentioned earlier, if you get power right, first of all, that helps you with the production side of things. And for us, it's not just, it's also about the value add segment or value add sector of the economy. Because, I mean, there's one thing, for instance, to talk about agriculture and producing, but the main money, the major spread, the major revenue comes from the value add. So if you're going to look at cocoa processing, for instance, there's a lot more money made when you convert your cocoa to chocolate versus when you just grow cocoa and sell, right? Same thing basically across feed, gold, whatever it is, commodities, it's a value add. So if we can look at how we can transform the economy from just consumption with a high or huge import bill to one where we start to produce a lot more so that we can start to export, then I mean, definitely we'll be on track. It's going to be tough, like you mentioned. It means making some hard decisions, but whatever it is, it's sometimes best to go through the hard, take the hard decisions now so that sometimes the project everybody starts to smile.
Right, and I recently spoke to a tie seller. Most of these are corporate ties, and I asked him, why are your ties so expensive? He said, because he imports, the ties. And I asked him, why don't you produce ties? It doesn't look difficult, to make a tie. And he told me that production here cost him more than actually importing the ties, and it actually made me have a rethink there, because we need to solve a lot of infrastructure issues before we can actually start
I agree.
Exporting.
I totally agree. Yeah. So if you can create the enabling environments, bring down your cost of manufacturing, then definitely makes you more competitive. There's no need trying to export if you can't bring down that cost of production, but it just will be competitive when compared to other places. I mean, I'm sure the cost of the tie in China might be, what, $5? By the time he brings it in here, maybe total spend might be something like $8 or $10, right? But if you have to produce the same time in Nigeria, just calculate what the cost of diesel is versus, power supply from PHC, and that's what he had. And you see that making that same tie here might cost him $20 or so. It becomes difficult for him to compete with people who are importing. And it's not just about banning items, because when you ban those items, what also happens is that the common man on the street has to pay more for the same goods or same service, or pay more for the same time, which leads to inflation. So create a proper, good, enabling environment where cost of power is lower, transportation, which is a big issue, can also be resolved. You can have transport by trains or whatever. I produce goods in the north and I want to sell them in Nigeria. I can put them on the train in Lagos. I can put them on the train and send them down. They get there in a day, right? And cost of transport versus going by road. So these are all the things one has to look at and create that enabling environment that would allow us to be competitive when compared to other countries. So that way we can start to produce and export.
Right, so much to unpack there, and an enabling environment is crucial at this point. Mr. Nwizu, we'll continue this conversation after the break. We've been talking to co-managing partner, commercial partners, talking about Mr. Nnamdi Nwizu. We'll continue the conversation right after this break. Stay with us. Welcome back. Still watching Business Morning, and we're still reviewing the Nigerian economy at 62. And we have Mr. Nnamdi Nwizu, co-managing partner, commercial partners, still with us here to continue the conversation. Thank you so much for staying on.
My pleasure.
All right, now let's look at the Naira's relationship now with the US dollar and other foreign currencies. And the relationship has been quite, unpredictable, erratic. And with all of this, it looks like some people are still getting rich, off this dysfunction.
Yeah, I mean, it's a tough one. We continue to see the Naira devalue, even in your analysis earlier on, the videos that we can see where the Naira has gone to from 2015 to date. Even if we were to look at it from the 1960s, early in the years, we had, by independence, we had currency awards, the Naira to $1. Now, if you have to look at parallel markets, about 730 naira, they're about $3, which is really crazy. So I think basically, I mean, we've got the resource costs, where you find one great resource and totally forget about other resources and other avenues for the country to make revenue. And what happens is that when that particular major source of foreign exchange starts to go down, starts to struggle, you realize that you don't have any backup plans. So we've seen crude oil production, which was highlighted earlier, go from about 2.1 million barrels per day to roughly about less than a million barrels per day. Look at the figures in August, right? And we've also seen a scenario where a number of countries are moving to clean energy, moving away from crude and coal. So the question is, whether crude is still there for the future. We've seen, countries like the likes of Dubai and co also trying to go into tourism, basically trying to create alternative means. So I think it's something that Nigeria needs to do, to try and start looking at alternate sources of revenue, and which comes back to what we talked about, being a production-based economy and being able to basically export other items beyond crude oil, so that way we can start to get, a lot more dollar revenues, which would actually improve the so-called Naira relationship with the US dollar.
Right, and looking at the issue of inflation now, there's a global phenomenon, at this point. Now, we've seen the U.S. Fed, rate hike after rate hike. We've seen the dollar actually go on a rampage, compared to other currencies. And here in Nigeria, too, we've been raising rates. And, we had the last jumbo 150 basis points. But we're not seeing the Naira react to this. And I'm wondering, should we be raising rates at all at this point?
Well, it's a tough one because we all know that inflation is not just about demand. You also have the cost side of it. So, I mean, right now you have, both demand pull and cost push inflation hitting the country. So raising rates basically can help you a bit with the demand side of the inflationary pressure, but doesn't solve your problem from the cost perspective. But however, you can't, once again, like I said earlier, no nation is an island. So you can have a situation where globally, most central banks are raising rates. You've seen that happen with the US Fed, you've seen that happen with Bank of England, EU. You have global rate hikes, and then you can't, as a country, decide that you're going to keep your own rates low, because it does basically creates a huge disincentive for people to come to your country, because when they get better returns in places like US and EU and co, then what's incentive to come to Nigeria? Even locally, when people see where your rates are and they see alternative investment opportunities in the US, where you can go and buy let's say Euro bonds issued by the same Nigeria trading at about 15%, and you're looking at what local bonds are trading at, and you're saying to yourself, okay, this doesn't make sense because I'd rather convert my Naira to dollars and go and invest over there. So the top one, but one is to help reduce demand, and secondly, it might help people, look at the Naira as a better option to invest in than moving to the US dollar.
And talking about the U.S. again, we've seen, how they've been raising rates, and, the Fed also uses a couple of indicators, to measure how much the rate hike is actually, helping with the fight against inflation. One is the job reports, that they always look forward to. But here in Nigeria, what other indicators are we looking at, to know if, these rate hikes are really working? Is it just that inflation figure, or is it when we see it coming down that we actually know that the rate hikes are actually working?
Well, yes. I mean, if you start to see inflation come down, then you know. If you start to see, for instance, a rise in rates of loan rates, right, to the manufacturing sector and to other corporates, and basically start to see a slowdown from them with regards to issuance of say commercial papers and co, which basically means that they are borrowing less Also, as a central bank, they would also check other things like money in the economy, whether I have a growth in savings rates or is it still at a particular low level. So you start to look at all those various factors and see, okay, the rate hike, is it encouraging people to save? Do you still have negative real returns? If you have a scenario where your inflation is at 20% and interest rates are 14, that's a 6% negative real return, right? So we also had the central bank say that as long as rates continue to stay high or continue to rise, then the most probably, that's inflation continues to rise, then they most probably continue to raise rates from their own perspective. So for them, I think a major indicator would be to see a slowdown in the inflation figures, right? And alongside the other metrics I mentioned, and then that will now say to them, or be a pointer for them to stop raising rates or start looking at continuing easing in some form.
Right, it'd be great to see QE at some point again. But now let's look at Nigeria's capital market now. You know, in your view, how has it performed so far in relation to the Nigerian economy?
Well, if you're looking at this year, we've seen a growth still if you're looking at the stock exchange index, right? But we know that the rate hikes have basically taking a toll, and we continue to see sell-off in certain names in the capital markets and co. If you look at, especially like the banking sector, which people believe are going to be squeezed with the rate hikes, with the CRR debits in particular, because increasing CRR means that banks are going to have less naira to spend. And it also means that even if you move away from the banking sector to other corporates, you're going to see them struggle a bit to raise funds, which basically means increased cost of capital for them and might affect their performance. Some would say to you that this is a bitter pill that we need to swallow to get things under control. But I mean, last year or 2 years ago was a record year for the stock exchange, but we've definitely not seen that happen this year in our capital market.
Right, and talking about the capital market, what do we have to do to get those foreign portfolio investment, the inflows, back, in full force into the market?
Well, from a monetary policy perspective, you would look at higher interest rates, more attractive for them. From fiscal side of things, or from executive government side of things, security is a big thing that needs to be solved, because it's difficult for people to come into your country to come and invest when you keep hearing stories of people getting kidnapped and people getting killed. So if we can solve or improve on our security issue, if we start to increase interest rates, we also make access to foreign currency a lot more flexible or make it easier. So, I mean, go away from the current situation you have, where people come in and have their funds trapped and they can't get out. So the central bank hasn't sold money to FPIs, that's foreign portfolio investors, since June or thereabouts. You see the airlines complain and talk about shutting down because they've not been able to get their dollars out also. So for them, they would also want to see liquidity. They know they can, come in and go out when they want. So I think that's also a key factor for them. But there's only so much that can happen if the economy as a whole doesn't improve. So for instance, it's difficult for the central bank to say they're going to sell dollars to all foreign portfolio investors when they don't have the dollars to sell. So you need to have production, crude oil production increase or improve. So that goes to, once again, security side of things, and which would help increase our revenues, foreign currency revenues, and also have, like I mentioned earlier, start to get other sources of revenues, so other sources of exports, which will bring in dollars, so that you get to build a healthier balance sheet, a healthier, foreign currency reserves, and that will give a lot more confidence to investors who will then be able to come in. They don't want to have to depend on the CBN to exit when they want to. They want to be able to go to the banks and say, look, I want to buy $2-3 million or $5 million, and they can really get that and exit and take out their capital or repatriate their profit.
Right, quite interesting. And obviously, 2022 has been a tough year for most investors, globally. And I want to know how what are you advising your clients, at this time? Where are those investable spots, that can actually beat inflation, and help you build some wealth?
Honestly, that's the million-dollar question, because a lot of markets have felt the pain, be it Nigerian equities market, be it the US equities market, Eurobonds market, local bonds, we've seen rates rising, so people who invested earlier are basically also struggling. So it's a tough one. There are very few investments today that you would say can outperform inflation, right? Some say agriculture, being able to get into agriculture. Once again, we talked about security challenges to that. For a lot of investors, we see them moving more into dollar-type investments because they say, if you have a devaluation of the currency, then what happens is that your dollar investment continues to outperform the naira and continues to outperform your naira investment. So we've seen a lot more investors moving into dollar-denominated type investments, be it Euro bonds, or some just want to stay in dollars, some are going to property abroad. So for a lot of people, it's trying to get some dollar or US foreign currency exposure versus just the local market here.
Right, so much to unpack there, Mr. Nnamdi Nwizu. And at some point, I hope that the next 60 years would be something great for us all in this country. Thank you so much, Mr. Nnamdi Nwizu, co-managing partner at Commercial Partners. It was great having you on the program.
Thanks. It was great being here too. Thank you.
All right.